to Leon's podcast, the podcast that dives deep into business and technology. I'm your AI assistant, Leon.ai, and together we'll explore stories, strategies, and lessons that matter. This video has been post-edited with AI tools, so if you notice anything off, we welcome your feedback. Please note, this content is for informational and entertainment purposes only. It is not financial advice. Let's roll.
Hello, everyone. This is Leon. I'm the host of Leon Podcast. Honored to have our guest speaker, JongHyuk, who is a second-year PhD at the University of Washington.
Yeah, thank you. I'm honored to be in this podcast. My name is JongHyuk.
What's your last name?
JongHyuk Lee.
JongHyuk Lee is a second-year finance PhD. Today is very honored to have JongHyuk here, and we will have some talk. His research topics, his short-term goal, long-term goal, and his past experiences. So let's start it. First thing first, I thought for our audience, not too many people are professional finance industry practitioner or PhD. So JongHyuk, could you give a 1 minute self-introduction about your whole self, about the past, and what you want to do in the future?
Yeah. Yes, I'm currently a finance PhD student. Before I came to UW Foster, I studied econ as a master's student at UT Austin. And before then, I was born and raised in Korea and graduated. I have a business degree in Hanyang University. Yes.
So you get a integrates for Hanyang University for what kind of degree?
It was a business degree. Had a lot of chances to work with finance professors. So I think that's one of the forces that made me end up in a finance PhD program.
I see. So go to Hanyang University for undergraduate in Korea and for the business, and go to military service for 2 years?
Yeah. After I finished my sophomore year, I served in the Korean Air Force for 24 months.
I see. And come back to the UT Austin for econ master, and then go to UW Foster for the finance PhD.
That is true. Yes.
It's very impressive because you have a very solid career path from the business to econ for finance. You also get the experience in military, which is very cool. So could you give a little bit introduction about what your research interests in the past? What about in the future, and your the kind of projects right now?
My first exposure to finance academic research was a project with my undergrad professor. He, at that time, was very focused on some NLP methods. Back time at 2018, 2019, many people try to do LDA stuff. Before BERT was becoming more famous, people try to do some classification things with NLP methods. And the text data was the 10K, SEC 10K reports. And those reports have self-introduction about their firms, what the activities do. And we try to do some classification, try to make a new industry classification using those kind of NLP techniques and those text data. That was my first exposure. At that time, that was the only thing I knew. I thought that was the cutting edge. All finance has to use those kind of methods. It's pretty shocking that when I came to UT Austin and had a chance to do some talk about finance research with those finance professors in UT Austin, it was shocking that AI or those NLP methods aren't the focus. The more important thing in finance academics is what kind of questions are important and how you solve it. The tools you use are just the method. They shouldn't be the end goal. So if you bring an important question,
I see.
You just bring up with the methods that are fit to solve that question.
I realize a very important question here and very interesting topics is, you say in Korean, you do your first project is still related to business finance, but it's using NLP, right? But when you go to Austin, you find out the professor in Austin, they are not that they focus on the masses for NLP or AI. They're still trying to find what is really important good questions in finance. So that makes you kind of thinking, hey, the question is always priority than others, the masses, statistics. There's so many right now fancy masses, statistics, machine learning, NLP, GMM, a lot. We are not trying to point out, right, the famous faculties in the industry or in the academia, right? They are very good to using these methods. But you point out the one thing is still, from your perspective, the finance important questions goes first, rather than just fancy methods to tackle with the questions.
Yes. I think that was the biggest difference between my transaction from Korea to the US, where the most of the majority academic research comes out from. The focus is that in Korea, you just do research what your professor says that is important, and you don't have a chance to challenge if this is an important question or not. But like, if you come to the States, the most important thing is that come up with what is an important question. Like, what is important right now, and what kind of problems there are, and what are the questions we have to solve. And then comes up that in order to solve those questions, we need to learn this kind of method, this kind of method, this other methods. It could be econometrics, it could be a survey, lab experiments, it could be AI, it could be machine learning. So the first order thing that we have to do is, what is the important question?
I see. So it's kind of like, here's a very interesting question I want to follow up is, I'm from China mainland, and I'm not sure whether I can represent China mainland research, but I didn't do too much on it. But I saw that Korean maybe the same is out of US, right? So question is, do you think for a Korean or a Chinese scholar in China mainland, they can define what question is important? I was thinking they're using the masses where they trying to fancy masses is with the aim of the population, right? I mean, let's be honest, in the academia job, you need good papers. You need something fancy. You need something good, right? New topics, new masses. But do you think like for compared to US people to Korean people or Chinese people, China mainland, they can't define what is their good questions? I was thinking whether there's a hypothesis is that they cannot define what is really important. Otherwise, they'll just follow the important questions to do their new masses.
Very sharp question. I think that first, we are not trained well or not emphasized well as much as the people in the States to bring interesting questions. Second, we may be more have an advantage or have better abilities to develop new techniques. Those are the two reasons. And third, it's sometimes important to make this question important, even though at this current stage, it's not important. And I think the people in the States, more famous professors at prestigious colleges in US, they're good at making this question that they are concerned into mainstream. So they're good at making the other researchers interested in this question. It's also what human beings do. There's a lot of politics in which kind of questions are important. Some famous professor just sets, hey, let's do this. Yeah, let's do this. And everybody does this.
I see. I got you. Thanks for honest. It's very interesting for this. Yeah, let's talk about your research interest. I know we have as people know, maybe we get a crypto reading groups. And also, like you have some analysis
secret projects.
Yeah. Some secret projects like the another projects, like different projects. And also, I know you do a lot of research about venture capital, PE, or corporate finance. So could you specify a little bit, like what is where it seems you got so many ideas, which is very interesting, and you have very sharp ideas to different things. But it seems behind it, you have a very close logistic what you want to do, like a big picture. So I'm very curious here is what kind of you want to do with a philosophy in the future.
I think everyone, most of the object, the goal of those finance research would be like try to make the market more efficient, which means that all the participants should play rationally. Someone shouldn't like rip off the others and try to make the market more efficient. That's one of my understanding of trying to make the market more efficient. I might try to see what kind of friction there are due to some conventions in the markets. If there are existing conventions, I might try to reveal them and like what's problematic, what's making it not efficient.
Same question here, and also maybe like represent my audience to ask a question. Is to academia, what is friction?
Friction, yes.
Yeah. How is that represent to make the market more efficiency? Very professional. So maybe give a more detailed story behind it. How to understand like friction? Let's talk about friction first.
I'll give you an example. Like, let's say like banks lending friction. There's a word called bank lending friction. Usually in good times, banks could lend money and then the firms that borrow money from the banks can get the money. But like, let's say there's a financial crisis in 2008. Some banks could consistently borrow money, lend money to the firms. Some other firms that had a lot of mortgage-backed securities aren't able to get those credits applied.
Yes.
So those kind of things might be a friction. Usually something should have happened, but like due to some shock, some unexpected shock, the results changes.
I see.
Yeah,
I got you. I see. How about like make the market more efficient? Say there's a
okay.
thing is like in the market, everyone, if the rational in the market is most efficiency. I saw it, we learned from econ courses. But here we got some noisy here, right? Not all the people definitely in the stock market are rational. They just random, like they pick one stock.
Yes,
And they
yes.
don't have original ideas about what a stock is, right? So just give noisy from the market to make the whole market more hard to play.
Talking about like information asymmetry might be a better way to
I
talk
got you.
about market efficiency. If some participant, let's say there's an IPO,
Yeah.
some firm wants to sell their stocks to the retail investors.
Yeah.
They know that their own firm value better than the retail investors.
Yeah.
So if the retail investors could gather information enough about that firm, the information asymmetry decreases, so the
Yes.
market could be more efficient. That would be more
I see.
one of the explanations.
Then how about using blockchain? If all the things report on blockchain, I mean, it's not blockchain. Let's say, I mean, we got 10Q or 10K, right? This is one of the things I learned from like the non-financial expert that can make the information more disclosure, more transparent. If there's more information disclosure, then definitely the market more information asymmetric decrease, right? Then the market make more
That's one
efficient.
of the objects of SEC trying to mandate firms to report 10K,
I see. So,
10Qs.
but here is my question: is how your research interested can help make the market more efficiency. Say you're doing corporate finance,
Yes,
like
yes, yes.
what kind of corporate finance you do topics can make the market more efficiency, or we another way can decrease the information asymmetry.
Question.
Hey, Philip Baum, listen to this topic really carefully.
Like all the questions you're giving me are very sharp, trying to make me in trouble. But maybe at this point, I might try to introduce what I was thinking, what
Yeah.
research I try to do. So you said that what kind of corporate finance research could make the market more efficient, right?
Yeah.
I should have had like an immediate question.
Or can I change my question?
Yeah.
Is my question again is if firm do right decision, if all the firms in the game do the right decision, does it equal to the market should be more efficiency? Say the right decision means follow the market, the firm's and own self, like self goal is only benefiting themselves, right? Is we don't care about the social welfare when we talk about Google, right? Only if I'm Google CEO, only talk about Google's own profit. So my question again is if we say corporate finance can help firm itself make good decision for himself. Is that equal to make the whole firm, the market be more efficient?
I think it's a very debatable question. It could be extended, like corporates have to talk about social responsibility, ESG. This is a place where to talk about my personal.
I see. There's a debatable space.
Yeah.
But do you think like corporate finance research will lead to firm to a good decision?
Of course.
Of course, right?
Yeah.
Of course.
Yep.
But the firm itself to a good decision doesn't represent the market should be definitely be efficiency. It should be, right?
This place is where market frictions come up.
Oh, I see. I got you.
If firms try to maximize their own profits using some market frictions, that could make the market more inefficient and the firm maximize profits. What we, like some regulators or our academics, might want to do is try to reveal those market frictions and try to change those stuff. And if we make that playground more efficient, and firms could just focus on maximizing profits, and the social welfare would also increase.
I see.
So that's
so this like basically intuitively is kind of how to make a win-win solution.
Yes, that's one of.
I see.
What we do. That's what of.
I got you. It's very interesting. Could we be more specifically, because I know you try to learn a lot of data from like auditing firms and also other firms have different like the sources. You just share like several potential topics. Not need to that like the decrease like specify, but what are we looking for right now?
We could talk about several stuff, but like we could talk about
let's talk the
auditing.
The most important right now, you think must do right now.
Yeah,
otherwise, like there will be lose a golden time to do it.
Yeah, this is a very early stage topic. I believe this is true, and I'm currently working more on this.
You don't need to talk to that much detail, but you can give a higher like the idea about this.
This is like very easy. I also haven't talked about this, but I think it's a good opportunity to talk about this. The thing that I got into my mind is about the fee structure in venture capital funds. For hedge funds or private equities, it's famous that we use the 220 structure. Have you heard about the 220 structure?
No.
Oh, it's about like 2% managed fee and the 20% carried interest fee, which is once you get money from the LPs, let's say like 100, like there's a venture capital fund and there's an LP who gives the money to the venture capital. So let's say the venture capital gets money from the LPs, like $100, and the venture capital could take 2% of that $100 and use it as pay employees, pay the rent. And then you also invest the leftover $98 into some firm, and that becomes like 10x, like it becomes like $1,000 10 years later. And then you get like the 20% of that return. That's the 220 structure. But like the problem here in venture capital is that there's two sources of fees for the venture capitalist. You could take the 2%, or you can take the 20% 10 years later. So at some point, the venture capitalists might want to fake the value of the firm that you want to invest and take the 2% versus the 20% with a probability. So you might get like the trade-off, or you might be at the margin of getting 2% of the fake value with this probability of 100%, versus 20% of that fake value with a probability of some percent. And if the probability is lower than 10%, which is 20 divided by 2, you have more incentive to fake the value the firm fakely and then gain the 2% management fee with 100% probability.
I'm kind of lost. And let me make a quick, like, the double check. So I
Yeah,
mean, like the VC, they can have a binary decision. Take the 2% right now, or take the 20% 10 years later, or they double earn it.
Usually they double own it. They could double own it.
But what is the problem right now?
The problem is, like, let's say there's a firm that the fund wants to invest. They initially think that the true value is 50 right now, but they have the incentive to use the LP's money to buy it in like 70, overvalue it. It's 70, not 50.
So they're trying to let the LP
Rip
spend
off
more money
yeah,
there, and there is room, like the
value. Yeah, because if you fake value at 70, you could take there's a $20 gap, and you can get the 2% of that $20 in a 100% probability. So that's when you do the fake value. But if you don't do the fake value, you could, like, the investment gets successful like 10 years later, you could get like the 20% of this fake, like the $20 gap with a probability of something.
Like also always trying to get LP to pay more because they can take advantage of the 2%. But here, do you mean is if potentially the project is successful, then GP actually earn more if they just make it 50 rather than 70?
Yes, that is true. Like let's say the 50 value becomes 200 like 10 years later.
Okay.
And the 70, if you fake value at 70, it becomes 200, the same at the counterfactual, right?
Okay.
So you get 200 minus 50, which is 150,
Yes.
20% of 150.
Yes.
Versus 200 minus 70 is 130
Yes.
of 20% of 130.
This trade-off is dilemma for the GP. They need to consider, if I trying to using LP to consider it as really a high value, then actually I can earn the short-term goal. But when that finally become a giant, a shark, then actually, because of I trying to foolish LP is really like the high value, then we can earn less. It's better if information is symmetric. It's better we know the future. Try to price the garbage products. Try to punish the good.
That is true. It could be for example, like
maybe like the back to 10 years before, say ChatGPT is a shit, and say like the Luna is very good, like this, then GP can earn a lot. As a GP own the interest is not doesn't relate to LP, right? There's an information line different, right?
That could be also one explanation. Maybe a more brief one would be like, let's say you're a venture capitalist.
Yes.
and you need to spend $50 into investing in something.
Okay.
You think that this is worth $30.
Okay.
But because you could spend $50, you just value it at 50, not 30. And if you invest in 30, you only get management fee 2% of that $30. But if you invest in $50, you can get 2% of that $50. So that's kind of one thing. And like if the downside of that strategy is that if it goes well, you gain less of that gap. The success probability, if the success probability is lesser than 10%, it's better to gain 2% in 100%.
So here's my follow-up question. What do you think potential, let's say you do not do like the comprehensive research right now to detail the model, right? But let's say what potential intuitive idea you can give to our audience who is maybe like the venture capital partners, and what is the best way?
What I was talking for the past 10 minutes was about there is moral hazard for the GPs using LPs' money. It's because like you get the money first from the LPs and then there's the GP's decision. So there's moral hazard. So I think that moral hazard comes from the 220 structure. So you might want to change the 220 numbers to like 120 or like 125. You might want to change that structure because those 220 fee structures are from the hedge funds or the PE funds. They just use that convention for the VC funds, but it doesn't work for the VC.
I see. So this kind of just directly copy it. It should be.
Yeah, I think there should be some change with the numbers.
I see. So yeah. Let me make a quick summary here. GP and LP have incentive disalignment, even though LP knows or GP knows, but they cannot actually do something to change it because of the wrongly designed structure fee to like the 220. So maybe need to change like the structure fee structures to make sure there will not be like the incentive disalignment between the GP and LP.
That is what I was saying.
And it can be a win-win installation.
Yeah, it's still
GP can earn more and LP can earn more. So there's a win-win.
Yeah. Like LP, you need to make the contract to incentivize the GPs to select true value investing, not overvalue the firms. Yeah, I'm still working on this. If I develop more evidence.
Okay, so my question here is, where can we find your new papers related to this interesting question, this interesting, important, promising research topics?
I do have my own website, but like...
What's the website here? You need the advertisement.
It's my academic website. If you
click this website URL, then you can go to JongHyuk Lee's website.
Yeah. Last question.
Yes, last question. So, I feel one thing, I don't want to point your age here, but I saw you are not that old. You are like only like the late 20s or something like this. You are very self-disciplined.
Thank you.
So here's my question. What's happened to you? What's going on to you? How is your life experience to shape you? Is military service make you here? What's going on here?
I think that's one of my personalities. Maybe educated, like my family. I grew up in a very comfortable family. My family provides like a very comfortable environment. So I think those kind of things affected me. But like if you talk about more ex post experiences that try to make me these stuff are like, maybe the military might have given me some effect, try to make me more disciplined, wake up at some certain time, do work. But also like I try to set my mindset as like try to be calm. Be water. Be water.
Like
that's the best phrase that I learned from Leon. But like, it's like sometimes I think like, I mean, like we're not saving the country, or we're not like in some very, very serious stuff. So we don't need to be that angry at this. We're not like we're trading like $1 billion every day. Yes. So if we it's pretty low stake at this moment.
It's a low stake.
Why do you have to be angry at this kind of level of
that makes sense
thing?
That makes sense.
If we're on like a war or like saving the entire country, we might have to be very focused and like stressed. But like let's be
chill.
Yeah, let's be chill. And Yeah, that's one of my mindsets I want to set. And like another thing is like we're on academia. You and I both want to be in academia and end up as a professor. And
Yes.
one of the things that the world expects, or I think my understanding of staying at the academia is trying to be calm. When there are people who panic, and when the world panics, we need to give them some solutions or some insights to them.
That makes sense.
Or we might have to give them insights before they panic.
Here is a quote I saw that I really learned it. When people be panic, you should be calm because you are the solution provider.
Or we already expected that. So we shouldn't, we don't need to panic.
What?
Yeah.
We already
have
prepared,
we
yes.
have a responsibility to predict things happening in our area.
Makes sense.
We need to give solutions when people panic. That's the reasons of existence.
Always have a stable heart. Always be water. Always have ready to.
Not always, but we could try.
Yeah, we could try.
Yeah.
We could try to like predict what's going on and
Yeah.
try to give solutions for this. Very, very well done,
Great.
all the audience. All right, I thought we should like finish this story, but really honored and happy to talk with JongHyuk Lee. All right, thanks for listening to Leon Podcast, and we will have following episodes with JongHyuk Lee and also other like the entrepreneurs in Seattle.
Yeah.
Other like the researchers. Yeah. Stay tuned. Also, hope you have a good one. All right.
Thanks. Thank you
See
for
ya.